Hi, good day to all. This is Kelvin here. I'm finally back from my 2 weeks break of my exam leave. So I believe that most of you are pretty much excited to find out what's going on the our usual weekly technical outlook on the major stock indices, where we cover the medium-term trend bias, that means the trend bias for this week, and as well as key levels to watch on the SPX 500, the Nasdaq 100, the Hong Kong 50, the Japan 225, and the German 40 index for this week of 21st of March to 25th of March. So as you all know that last 2 weeks, the market has been pretty dramatic in terms of the movement that we see since so far. So before we jump into the technical details that I'd like to share with you all, let's take a look at the disclaimer slides first. Okay, so let's take a quick look at the momentum analysis, the raw momentum analysis across the group from the various region, from US, Asia, all the way down to Europe. Okay, so as you all know that in the last 2 weeks, market has been pretty bearish on the downside, driven by risk of geopolitical risk, pardon me, geopolitical risk, Russia and Ukraine situation, as well as inflationary risk, where the Fed, in fact, the together with the rest of the major developed central banks, they are on a monetary tightening mode, which is doesn't bode well for equity prices in terms of this risk on, risk off scenario. But what we see last week is pretty dramatic. Is that there's a turnaround in the price section of the major stock indices from US all the way down to even Asia as well. So what we could see is that last week ended pretty positive across the board. And what we could see is that the one that is top performing was actually the Nasdaq 100, which actually consists of this high beta technology company, which was actually underperforming in the prior 2 weeks due to its sensitivity with its higher sensitivity with interest rate hiking scenario. That means once we start to see a global tightening scenario, it does not bow well to growth stocks like technology stocks as per se. So, but however, last week performance was pretty positive. I would say dramatically, it actually reversed its prior week or week performance, and in fact also stood above, went above its prior 4 week average. That actually allows it to have a difference of 10%. Okay, which is actually this is the moment the rate of change, similar like a rate of like a momentum analysis. That means what we did is that we did last week performance, compare it with its prior 4 week average. In fact, across the board, all of them are start to see a very positive momentum follow through of last week performance. So what we could see over here is that last week performance, right? Why it actually causes this sharp uprise in momentum is actually two things that I actually mentioned in my daily market commentary in my social media account, which is my Twitter account. That I share with you for those who hasn't followed me. Do give a follow because I actually explain the mechanics what's going on in the market. So last week, what we see last week was on early part on Wednesday. Well, this China top policy committee, which is actually the State Council, one of the State Council committee, actually made a verbal intervention in the markets, saying that they are actually looking into the current situation in the financial markets in China that has been coming down pretty drastically in the last 2 weeks, as well as they also did mention that they are still keeping a close eyes on the liquidity crunch in the China property sector, and as well as looking potentially to end we call it stringent measures that's being imposed on China technology platform firms that actually driving this negative we call it feedback loop into the Chinese stock market via the China big tech, and also there's this risk, geopolitical risk between the US and China as well start to increase in the last 2 weeks as well, where US officials actually made an allegation that China is actually supporting Russia indirectly, which means, i.e., China could actually face the consequences of potential sanctions by the international community uh, in coming weeks if US were to actually push ahead with these sanctions. So that actually drives a lot of negative feedback loop into the China market. We start to spill over to the rest of the world. But once the announcement has really been made by the China State Council, it actually reversed the sentiment, and the reversal of sentiment actually came in line with this risk event that actually took shape last week, which is the Fed FOMC, prior to the Fed FOMC, as well as last Friday, this triple witching, which is actually a major US stock market option expiry, where simultaneously you see equities option, a single stocks option, as well as futures that actually expire on the same day on last Friday. So that actually drives the sentiment is of the markets from negative to positive, but that's more likely to from a flow driven perspective. That means short covering, I would say, and as well as option dealer this hedging mechanism that is in play that drives up this sharp up move in these equity prices. But however, in the longer to medium term, that is what talk from a multi-month approach, about 3 to 6 months, that is doesn't seem to have a fundamental backing at this moment in time. But if you are talking about from a shorter term perspective, we got to respect the sentiment that is actually in place right now, which is a positive sentiment as we've seen last week. So now, before we dive into this individual charts of the various stock indices, like share with you all, that means the technical configuration, the key levels to watch for this week. Let's take a quick look at the performance last week of the 11 S&P sectors. That means the 11 US major sectors that consist of the S&P 500 index. So what we could see is that pretty strong, pardon me, excuse me, pretty strong, remarkable showing as well on the SPX 500. So what we could see is out of 10, uh, pardon me, out of 11, we have 10 out of 11 sectors that's actually showing in the green, especially those that are actually being driven by higher beta sectors like the consumer discretionary and the information technology is actually leading the fort by 9% to 7% increase. And the one previously 3 or 4 weeks ago that was actually outperforming, which is the energy sector, has started to show a bit of underperformance last week by down negative 3.5, 3.6%. So that actually boils out in line with the pullback seen in the oil price as well. So this morning, I just shared with you all my outlook on the oil prices. Despite last week pullback that we see 1 week ago, the medium term and the major phase of the up of WTI crude oil, they are still pointing potentially upwards. That means we still expect to see higher oil prices going forward based on the technical analysis approach, okay, which I should share with you earlier this morning in my social media channel, which is my Twitter. Later I'll share with you how to actually get access to my Twitter account, okay, where I actually talk about what's going on in the global market space. So now, really, let's jump straight into the technical charts of the stock indices. All right. So the first one, we start off with the SPX 500. So before I jump into SPX 500, let's do the top down first. We start from a weekly approach. This is my quarterly outlook for Q1. Which we're going to have a Q2 outlook soon, which is around the fourth week of April. So do keep a lookout on that. So what we are expecting over here is that we mentioned 4240 was my long-term pivotal support level. So what we could see in the last 2 weeks, in fact, last week for the week of 7th of March, actually did a challenge of it. And thereafter, it actually last week it did a short reversal from 42.40 from here. And prior to that, we start to see a series of bullish hammer candlestick that actually taken shape on the SPX 500. So what we could see is that 4240 was indeed a key long-term pivotal support. Yeah, there's some whipsaw, some high volatility that was seen 2 weeks ago. But what it did over here is that last week it managed to have a strong push reversal up from this 4240. So i.e. Right, technically what it means over here is that we could still start to see the last move up of impulsive up move. We call it the last move of hope and irrationality to complete this long-term structural Roman big wave 5 of this long-term 13-year bull trend that is in place since the low of March 2009. All right. So this is potentially the last push up of hope and irrationality towards the risk level of 4990, maximum 5170 slash 5000 5400 figure level. So then thereafter we may start to see that potential 30% to 40% major corrective decline or phase to actually take shape from there. So all in all, right, what it means from now is in the short term perspective, we can still see potentially higher movement upwards due to the change in sentiment last week. even though it is not fundamentally driven. All right. So it's just based on flows and short covering, but we still got to respect the price movement of the S&P 500 or as per se the global stock market if we are trading from a short-term perspective, and i.e. Given that we know that it's not backed by very strong fundamentals in the market or in terms of economic data right now, we just got to be more mindful in terms of risk management when we try to trade from a shorter term perspective. All right. So now on the daily chart, we could see over here is that pretty positive as well on the RSI. RSI, we start to see a bullish divergence that has actually taken shape 2 weeks ago. Last week, it did a bullish breakout of this former descending trendline resistance. Okay, did a breakout. So what we could see over here is that, i.e., medium-term upside momentum has starts to shape up from negative to positive. That actually supporting further potential up move in price action as well. So the intermediate support level to resistance, pardon me, to watch for this week will be 45.90. Okay, so 45.90 is my resistance for this week. That means we're taking one step at a time. A break above 45.90 then could take us up higher to retest the current all-time swing high area of 4805 slash 4818 level. All right, so the strategy that I have for this week on the daily, on the 4-hour chart is as long as 4330, excuse me, as long as 4330 is my key medium-term pivotal support level right now. So we may start to see a bit of short-term pullback given last week short push up in price action. So as long as 4330 holds, so what's 4330 is in fact if I will do the Fibo retracement taken from the low of 15th of March all the way up to last week high is coming close to 50%. All right, 50% Fibo retracement, as well as this pullback support of this former descending resistance that has kept previous up move since its all-time high of 4th of Jan 2022. So as long as this pullback managed to hold at 43.30, we're still expecting a further potential up move to actually retest the resistance level at 45.90. So nevertheless, if it has to have a 4-hour close below 43.30, then we will start to see another round of whipsaw price action again to retest the long-term pivotal support level at 42.40, maximum the low, we call it the 24th of Feb low of 4107 level. All right. So overall, a change in sentiment right now. So we're just expecting a further potential push up in the SPX 500 after a minor pullback to take shape, as long as 43.30 holds for this week. All right. So now, what's next for the Nasdaq 100? So what we could see this Nasdaq 100 over here is that let's go to the medium term, the weekly chart first. So on the weekly chart, previously we have this 13900 as my key long-term pivotal support level. Last week, not last week, the prior week, it actually broke below this level and a bit of whipsaw. And last week, it did a dramatic rally back to close above 13,900 level. So what we could see here is a bit of a whipsaw around here at this 13,900, and as well as this level here, okay, which is at 12,923 level. So we could see it's a zone, it's a key pivotal support zone right now. What we could see potentially is similar scenario with the SPX 500 that right now we are undergoing this potential last up move of hope and irrationality to complete that 13-year of a bull market cycle, which is that romantic wave 5, okay, labeled as wave 5, which is over here. Okay, okay, 2, 3, 4, 5. Okay, as you can see, so this is the romantic wave 5 to complete that 13-year of bull cycle for the Nasdaq 100. So thereafter, we may start to see that dreaded uh, 30% to 40% corrective decline on the Nasdaq 100. So levels to watch, we definitely on the upside is if we could break above 16,900, then we'll start to see the maximum risk level of 17,590 slash 18,150. So, but for this coming week, right, we are taking things one step at a time. So definitely the resistance level on the intermediate term will be at 15,160, which is the 200-day moving average, slash 15,540, which is the former swing range support of 2nd of December and 17th of December last year. Okay, so what we could see over here is that it managed to stage a bullish breakout as well from this descending trend line that has kept previous upside since 28th of December 2021. Right now turns into a pullback support right exactly at the 13,900 long-term pivotal support that we highlighted on the weekly chart. So very positive in terms of momentum as well, and start to shape that bullish divergence that was seen 2 weeks ago over here, which is telling us, implying to us that this last push down, the downside momentum has already been eased off, and right now we are in the midst of, we call it shaping further potential upside supported by a change in momentum, in medium-term momentum from negative to positive, as indicated by the daily RSI oscillator. So on the 4-hour chart over here, that means that's our strategy for this week. So what we could see now is the 4-hour RSI has really hit the extreme overbought level. All right, from here, so what we could see is that we have a extreme overbought level of this range. Okay, based on previous price action since this October last year. So what we could see is coming very close to the extreme overbought level at 80%. So what we could see right now is potentially we may start to see a minor pullback first towards 13,820, which is actually the former swing high area, minor swing high area of 10 of March, 11 of March, as well as the 50% retracement taken from the low of 15th of March all the way up to last week high over here. So it's come pretty close to 15% retracement as well. So all in all, right, what we could see is a minor pullback. So as long as this pullback didn't surpass below 13,820, potentially we could see another up move to actually retest the intermediate resistance that are highlighted on daily chart at 15,160 from here. But however, if we start to see a 4-hour close below 13,820, then we will have another round of whipsaw price action again to retest the recent swing low area of 16th of March and 24th of February at 12,970 level. Okay, so now moving on, next will be the Hansen Index. So for the Hansen Index, right, it's the trend of Hansen Index has really been damaged. The long term circular uptrend. So what we could see right now is Hansen Index, right? It has already broken below this long-term circular ascending trend line support since October 2008 low, which is the Great Financial Crisis low. Excuse me, which is at the 23,000 level. All right, 23,000 level over here. So what we could see over here is that last week decline actually paused at this swing low area of 31st of Jan and 27th of March 2012 and this February 2016 level. Okay, so what we could see over here is if I were to do a Fibo expansion level taken from the top of January 2018 to the low of March 2020, project it for February 2021 swing high. So this is the high where actually formed before the kickstart of that dreaded 12-month plus of we call it crackdown or we call it stringent we call it a stringent clampdown on the business practices of China big tech platform companies from here that actually drive the dramatic decline, okay, of the Hong Kong 50 index. So it actually is actually one-time Fibo projection at 18,050 level. The price managed to pause at this level, and also if we were to do a Fibo retracement from the low of October 2008 to the current all-time high, which is Jan 2018, it's at the 61.8%. All right. But the support level right now is that the long-term circular support level, right, is this 16,140 slash 15,650, which is this bright green line here, which I draw all the way from August 1998. Okay, August 1998. So what it means that overall, right, this major downtrend that is in place since 2018 all-time high is still a major downtrend. Uh, we could still see further downside movement to actually test 16,140 slash 15,650. That means what it means that last week low is not a major bottom yet, based on the weekly chart of the Hong Kong 50 index from here. And also, right, if you look at the weekly RSI, there's no signs of a bullish divergence that was last seen previously from August 2015 and Jan 2016 that managed to kickstart this significant up move to actually print the current all-time high at Jan 2018. So there is no sign of such bullish divergence observation that was seen last week, except that it's just being oversold. So what it could mean that over here is that in the coming weeks, it could still do a bounce, but this rebound is more like a dead cat corrective bounce back towards 23,100 level, maximum 24,700, which is this pullback line, the pullback resistance of that former ascending trend line support from the Great Financial Crisis 2018 low, and as well as if we do a Fibo retracement, taking from the high of February 2021 all the way up to last week low, is at 15%, 50% retracement as well, which is 24,000. The 4,700 level. So all in all, right, we just got to be very mindful of this the potential ongoing rebound that we may start to see in the coming weeks. So it's more likely to be a corrective rebound within a major downtrend phase rather than the start of a major bottom that could actually take the Hong Kong 50 index to a fresh all-time high. So that scenario is very unlikely. So a scenario is more favored towards a corrective rebound instead. But in the short term, we could still, we call it technically, it still could offer a reasonable reward risk ratio to actually take a look at the short-term tactical rebound. So on the 4-hour chart, what we could see over here is as long, okay, so basically okay, let me have a quick, so what we could see over here is that previously from 18th of February 2021 high, it has been trading in this kind of expanding wedge configuration. So last week price movement actually dipped below the expanding wedge through a very shocking manner and did a V-shaped reversal due to the verbal intervention from the China top policy we call it committee, which is the State Council Committee, one of the committee inside the State Council, which is considered as China top policy, we call it body, okay, that actually dictate economic policy to actually run the Chinese economy. So that's very significant if any words come out from them. Okay, so what we could see now is a bit of retracement so far. Okay, short-term intermediate support at 20,860. So what we could see if I were to do a Fibo retracement level from last week low all the way to last week high. 50% retracement is at 20,100 level, which is also the former, we call it support here, the support broken that actually kickstart the dramatic decline before it's being reversed up to the upside based on last week verbal intervention. So definitely this is a key psychological level as well, from a level that kickstart a steep decline, and also thereafter it managed to actually reverse up from that verbal intervention from China State Council. So what we could see over here is that as long as 20,100 holds, it it don't have a 4-hour close below this 20,100 level, we could still see potential upside to actually test that former, we call it a key long-term pivotal support at 23,000 slash 23,380, which is the former, we call it a swing low area of 28th of Jan 2021. Over here, that actually kickstart this, that was broken and kickstart that steep fall as well. So as long as 21,100 holds, there's no 4-hour close below it, we could still potentially see the Hong Kong 50 index to actually shape further potential up move to actually retest this intermediate this resistant area at 23,000 slash 380 level. Okay, so now quickly next over here will be let's take a look at the Japan 225 or the Nikkei 225 index. Pardon me for my bad cough. Okay, so as you could see, this is the Nikkei 225. So Nikkei 225, right? Uh, Previously we did mention it has a bearish top configuration. That's why I'm pretty much cautious. So last 2 week of price movement, right, has already broke below the bearish double top. Actually, decline all the way down to a key graphical support at 24,480 slash 24,180. So what's this level? So actually, if you look at it, it's the former swing high area of 17th of December 2019, October 2018, at 17th of Jan 2018 level. So this former major range resistance turns into a pullback support level. And also, if I were to draw this potential exit from this bearish double top level from here, okay, project it to the breakdown of the neckline. Okay, so more or less is coming very, it came very close to the graphical support of 24,480, 24,180. So all what it means that this exit right from this bearish double top formation has really fulfilled its a price target from there. That means, i.e., what we could see over here is that the chances of it coming down much further in the coming weeks, right, seems to be less remote right now, given that its price objective has really been met, as I actually shown you earlier on, taking from the top, from the the top of the double top, project it down to the neckline support level, and you see that the price projection has really more or less been met. So what we could see over here is there's actually a intermediate resistance level. Its previous resistance turns into a support level at 25,700 level, which is if I have to draw a Fibo retracement level, taking from the last week low, 8 of March low is a 61.8%. All right. So, and also momentum has started to turn positive as well in terms of medium term momentum, where the RSI starts to break above this former descending trendline resistance, now turns into a pullback support level, and hasn't reached the overbought zone yet, which indicates to us that the medium term upside momentum has starts to revive towards the upside. Okay, that means supporting further potential price up move. So where we are just expecting the price to actually at least move up to, at least for this week, will be at 27,900 in the first step, which is actually the graphical former support level, which is the neckline support, now turns into a pullback resistance, and also the former swing high area of swing high of 8th of February, which is also confluence at 27,900 level. So this will be the potential resistance that we are watching for this week. If the price action were to actually able to move up higher, so this could be the potential level where price to actually be heading to for this week on in the K225. So all in all, right, if I were to look at the 4-hour strategy, the strategy chart of the 4 hour. So what we could see now is a bit of pullback first. Why? Because of the RSI hitting at an extreme overbought level at 77%. A bit of minor pullback towards the intermediate support at 26,330. So as long as there's no 4-hour close below 25,700, which I highlighted earlier on the daily chart, we could actually, after this pullback, we could see a push up to actually retest that resistance at 27,900. But nevertheless, if we start to see a 4-hour close below 25,700, then we could see another round of we call it a whipsaw price action to actually shape a drop to actually retest the 8th of March low level, which is the graphical support level, the major graphical support level that was depicted on the daily chart much earlier on at 24,480 slash 24,180. Okay, so then now, lastly will be the European index, will be the German DAX. Okay, so for the German DAX, right, what we could see over here is, let's go to the weekly chart. So on the weekly chart, right, the key support level, the key long-term pivotal support level was 13,600. So it was actually challenged on the first week of March, where actually has a weekly close below this 13,600 level, but managed to find a bit of support at this former swing high area of 30th of August 2020. Okay, over here, which is at 13,180. So a bit of excess below 13,600 slash 13,180. Then last week, the price action, last 2 weeks, price managed to actually reverse up and actually close back above 13,600 level. And the RSI will start to bounce off from this extreme oversold level as well. Right? If I were to actually draw this level here, okay, at the 21% level. Okay, so you could see pretty much clear where it managed to reverse up from this extreme oversold level at the 21%. So what we could see now, right, is definitely bearish momentum has really been negated so far, but we have a intermediate resistance to actually monitor be at least 14,800 before we could still perceive potential upside. So what's 14,800 is very clearly is the former range support that is that the index managed to hold since early May 2021. So that is a pretty significant level. That's more than 3 or 6 months where price actually managed to help above this level before it was actually broken down on the third week of February, okay, due to the Russian invasion in Ukraine. So definitely 14,800 will be a key resistance level to watch for this week. Okay, so now moving on to the daily chart, right? What you could see on the daily chart here is pretty much clear 14,800 slash 15,030 level. So if we could actually draw a Fibo retracement, okay, it's at the 61.8% from here, 14,080. Then the line here, the former range support now turns into a pullback resistance, which is at 15,030. So definitely this zone over here will be the first resistance to actually watch if price action were to actually shape further up move at this juncture. So after hitting this level, then we got to be more cautious. It may just trade side a big sideways movement unless we could start to see a direct push up from this level to start to see further potential upside on the German 40 index. All right. So, but nevertheless, momentum starts to turn positive on the medium term from a medium term perspective, where the daily RSI managed to stage a bullish breakout from a former descending trend line resistance. Okay, that is in place since 18th of November 2021. So now on the strategy chart that we have so far is we expect a bit of pullback towards 14,100 level. Okay, so as long as 13,600 holds for this week, there's no 4-hour close below this level, we could still see a potential push up to test that key intermediate resistance zone of 14,800 slash 15,030 in the first step. But if we start to see a 4-hour breakdown below the 4-hour close, pardon me, below 13,600, then all bullish movement bets are off. That means we will start to see another downside again to actually retest the 7 March 2021 swing low area of 12,470. Yeah, so I've covered the technical picture uh, across the globe. Pardon me for my cough, if my voice sounds a bit bad because I just recovered from COVID. So I still have that lingering dry cough that is in me right now. So hopefully it gets better in the next couple of days. So before we go over here is that just to sum up everything, there's a dramatic change in the sentiment of the major stock indices that we highlighted earlier across the globe from US, Asia to Europe. And this dramatic change has been primarily driven by that verbal intervention from China State Council, which is a top body that actually dictates China economic policy. And as well as it actually came in line with key risk event like the Fed FOMC last week and as well as option triple witching US option expiry on last Friday, which take us to the point that the current rally or the movement that we see right now is more flows driven rather than being backed by fundamental data. As you know, that fundamental data is still weak. There's still risk of stagflation. So this boils down in line, all in line with our last movement for the US 500, the SPX 500, that we could still see potential new, fresh, higher high. But this is the last up move of a move of irrationality and hope before that 30 or 40% major corrective phase take shape to actually retrace the entire 13-year bull cycle that is still in place right now so far since the great financial crisis low of March 2009. Okay, so before we go, is that this is my Twitter handle. So you can actually follow me. Just open a Twitter account, it's free. Then after you open a Twitter account, register it, and you search my name at Kelvin SC Wong. Then you're able to see my daily code. This is my chart of the week, the highlight for this week on the instrument euro dollar. Can take a look at it. And also this will be my entire morning daily commentary thread the commentary will actually write about what are the key things to watch for this week, what is Monday. So I'll just write out what's the key economic data and as well as some of my thoughts that what happened over the weekend and especially in the financial marketplace, like what I see in the SPX, the FX market, euro dollar, dollar yen, and the commodity prices. So do take a look at it to actually have an idea of what's going on in in the global markets and what are the factors that is driving these global asset classes. So with that, have a great trading week ahead, and I see you again in my next video.